Hello, and thank you for coming to Investment Made Simple, Flipping Homes. My name is Darcy Elman, and I am your host today. This is a series that I've been doing for the past several months. Tonight, we're going to talk about flipping homes. I am a real estate agent with Compass. I sell real estate in San Francisco, Marin, Sonoma. I moved down a little bit through the peninsula. I wanted to start off in terms of what is the definition of flipping. Now, of course, all of you might know on the call that flipping homes means buying residential property low and selling high. So, one thing I've wanted to start by saying in terms of flipping homes is that when you are looking for a home, it's important to understand what you want out of an investment property in terms of long term and short term goals, and in terms of what you hope to make once you sell. There's always a risk in flipping homes, there's always a risk in any investment. And the question really boils down to what's your risk tolerance? And some people don't have a high risk tolerance. And so if you don't have much of a risk tolerance, preparing a home and getting it ready to sell and put back on the market might be a little scary for you, because the truth of the matter is, when you buy a house, depending on what the scope of the project is, it's really possible that the market could change while you're in the midst of remodeling. So you always need to ask yourself, are you willing to have two options when you go into a flip project? And that is a business model, flipping homes, just like it could be that you buy a apartment building, a 1 to 4 unit apartment building, and you're collecting rents for passive income. Flipping homes is a different kind of a beast. And we're going to talk a little bit about what to look for and how to evaluate a good house that to buy, so that there's an upside around your return on investment. One thing I noticed with people who love the idea of flipping homes is that they enter the concept of flipping homes with a lot of assumptions. And what they assume is that they're going to buy a house and they're going to do minimal and get it on the market and it's going to sell for more. And there's no question it can really happen that way. You may just walk into just a home that looks a little bit dated. It looks worn out. It looks tired, and you might really have an eye for design and might see, look at the envelope of the home and say, oh, if I change the carpet, if I paint, if I add a new countertop, this would really make the house beautiful. And I'm here to tell you, it will make the house beautiful. But a lot has to do with where the market's at and where you buy and what you expect, what you are hoping to pay in terms of your remodel costs. And then if the market can, by the time you're done, if the market is staying exactly where it is when you purchase that house. I was told this and I realized it was really kind of my issue. And that one thing someone said to me one day, and I realized, because I'm an investor, that most investors don't ask questions they're afraid to hear the answers from. And I know that to be true for myself personally. I go into a project of whether I'm flipping a house or a investment property, and I'm so excited, and I think I run all the data, but I don't really question some of the issues that I know are at hand, because I kind of don't want to hear the answer. I think it's the most important thing is to understand the scope of the project, stick to budget, and ask hard questions. And what I mean by that is, do your due diligence. So when you find a home and you say, I'm going to put an offer on this, make sure you're a realtor, and hopefully you will find a realtor who understands investment property, because that is a whole separate skill set rather than helping people buy a dream home. So when you're looking for an investment property, you want to write an offer with contingencies so that you can do your own inspections with someone that you know to be very thorough, and all the hard questions that you're kind of wondering about will come out in those inspections, and you'll have the hard data. And even if it does cost you $500 to $1,000 for inspections, at least you're not getting into a project and losing money, because you want to be able to budget your project. And the actual interim time before you close is your time to do due diligence and get out before it's too late. So when it comes to flipping homes, one of the most important things about buying a home is to understand that whatever choices you make on the project, whether it be carpet, color of the walls, or designing a kitchen, redesigning a kitchen, you have to take into consideration who is going to be the buyer. Because certain neighborhoods, I know for this to be true in San Francisco, really attracted certain kind of demographic. Like, for instance, if you're buying a house in the Mission or Bernal Heights, which are, the Mission is primarily a very eclectic neighborhood. It's extremely fun. It has tons of great restaurants. There are a lot of people in the Mission. Houses are close together. It attracts a certain person that loves being outside. It attracts a demographic of people who love going to restaurants. They love diversity, and you want to make a house appeal to someone who loves that kind of a world. So you might not make design choices for someone that you might make design choices based on the person who will buy that house. So design choices that make sense. Consider the demographic and the buyer in that neighborhood. How does your project affect community? I'm really big on this. It's one thing to say you're doing something for, profit, because it is, but remember that you are selling a house to someone who's going to love that house. And you're remodeling to fit into a neighborhood, not to make the house in the middle of a bunch of other houses feel really awkward. And I say that because you want to bring community together, because it's housing and it's people and it's shelter and it's where people live. So you want to really understand the scope of what that means to that whole street of people living. You're doing a remodel, but they have to live with the choices you make. And I think being sensitive to that is just, going into a project with caring about the community, caring about the person who buys this from you, and caring about, how you're seen as an investor and a developer. And then what do you hope to gain in a larger context? Are you going to do another flip? Are you going to take some of those proceeds and keep going? And that's the concept of flipping. You make some money, then you use that money to buy another house, and it becomes a business model. However, you can just do one flip a year. I know many, many developers that do that. And I personally think flipping doesn't have to be short term. You might hold on to a property for 2 years. It still could be a flip, because you still could be making quite a good amount of money. And it would be a flip because it's not a long-term hold. It's a short-term. And flipping, the concept of flipping is a short-term sell, right? You buy and then you sell. So here's a flip that a friend of mine was involved in. The house on the left, I think they bought that for $500,000. It's in Emeryville, Oakland. Oakland is really hot right now. The house on the right is how it looked after the remodel happened. Of course, now they did quite a bit to this. This is not just a cosmetic flip. They went in and really, really made the inside beautiful. This was going to go on the market. They bought for $500,000. It was going to go on the market for $825,000. The last I heard, the price had gone up to $950,000 because the market had gone up and the demand was so great that once they finished the remodel, they were able to, lift the list price even higher than they expected. So that's a very positive flip. The market actually shifted in their favor. Buy low, sell high. So when you think about a flip, here's a question I ask my buyers. What do you want to buy? And a lot of this is driven by price, like what do you have? Might you want to go into a flip with $600,000, or maybe you have $2 million, and maybe you even have $3 million and sitting around, and you want to take that $3 million and have your money work for you. TIC, all of these kinds of houses have different issues, and as a result, command a different sale price. So a TIC, tenancy in common, there are loan issues there. Usually you can get into a TIC the cheapest. I recently bought a TIC in the end of 2019 during the holidays. It is a flip for me. I did just very minimal. It was very beautiful, and I'm hoping to maybe come away with 150,000 after all my expenses. And I am putting that on the market next spring. And that is in San Francisco, and condominiums are really have dropped in San Francisco right now because a lot of people are moving to Marin, Napa, and Sonoma. They want more space. We are in the pandemic. This conversation is right smack in the center of the pandemic. We're all sheltering in places. So a lot of people who hold condominiums as rental properties are getting out of the rental market because a lot of people are losing their jobs and they can't quite afford their rent. So it's causing landlords to say, is it really worth it? And they're selling their condominium or their TIC. The issue with the TIC is that you hold the title with everyone else in the building. You don't own your unit right out, you own the whole building. And as a result, most lenders will not offer a 30-year fixed mortgage on a TIC. So what that means is that you are forced into an interest-only mortgage. I happen to like interest only. I think it's great because your monthly payments are low, and if you're going to do a flip, that could really work for you. So that you're not putting out a lot of money month to month. Condominium, you are owning you're in an attached you're in an envelope of a building with other condominiums. Your walls are attached, most likely, and you do not own a fraction of the building. You own the exact square footage of what's behind your door when you walk into your front door. So condominiums, you can't get a 30-year fixed mortgage. They tend to hold their value. They are a little more expensive to buy because it's just autonomous. You're not sharing the expense of the building with other people. There's more risk in a TIC. If one person defaults on their side of the property tax, everyone else is going to be responsible for it. So it's a safer choice, and as a result, banks are willing to lend on that. It's still a small space, and as a result, right this very second, we're in 2020, condominiums are not going up. In fact, they're dropping in rate, and they're going to be the first things to drop when the market really falls apart. But they are great beginning properties to get into for renters and first-time home buyers because a little less expensive, and you're starting to build your portfolio. Single-family homes, which is one of the most safe investments to do if you're a first-time home buyer, or you have already owned single-family homes, or you want to do a flip in a single-family home. The highest return on investment, I would say yes. And you are getting the price of a single-family home is quite often based on location and then the number of bedrooms involved. Multi-units, 1 to 4 multi-units, kind of my preference is to help people get into a multi-unit building, buy a multi-unit building because there's a lot of passive income. And if you have the money for a 2-unit or a 3-unit triplex or a 4-unit, you can take those 4 apartments and just have them as rentals, or you could consider condo converting. That's another conversation. 1 to 4 unit apartment building or 1 to 4 unit, you're actually buying the 1 to 4 units and you're turning them into TICs. There's not a whole lot of regulation around selling each unit as a TIC. So that's a great investment conversation to have with your realtor. Apartment buildings, and condo, again, I said condo conversion. Apartment buildings are going to give you the most passive income because rentals, are usually a safe bet in the Bay Area. Right now, we're in a little bit strange time, but still would recommend it. And then mixed use is trending right now, and that is a commercial on the bottom and several apartments above, and you're getting different kinds of rent. And with commercial, there's not the rental tenant laws that there are with the apartments. And I will say that's one other thing that's driving landlords to sell, which is, just having tenants in there and having, not being able to raise their rent. So that's really affecting how many people are putting money into rentals right now because it's a hassle and sometimes you don't make your money back and you have your mortgage to pay and you need your rental income to be paying that. So uh, this is a building that I bought. What I walked into this condominium, this TIC, this is in Noe Valley in San Francisco, and this is my view. The realtor did not advertise the views, and this does come with parking. I redid the floors, I repainted. You see, it's really beautiful, and it's surrounded by beautiful single family homes. I am hoping next spring to put this on the market and sell this. And my thought is that after I do this flip, I'll buy a multi-unit, and I'm looking to TIC convert maybe a duplex, and then I will sell each of those units separately. So that's my idea with where I'm going. Purchasing a home to flip. One thing you want to consider is the scope of the project. You want to look at comps. I would recommend you run a 3-year graph of sales in the neighborhood so you can see the ups and downs of that neighborhood. I would ask you to know what the rental market is before you purchase, and a good realtor will help you, will run comps on rentals as well. I do that for my clients. Location, location, location. Because you're going to be working on a building, if the market changes, you need your location to support wherever the market is. If it's a good location, you can pretty much assure you're going to make money if you buy correctly. Financing your residential loan, I would say that you should have your financing in place. You should understand exactly how much the scope of your project, and you should consider getting a loan far beyond what the purchase price that you're paying, because you're going to need a little cushion. Even if you do price out, a cosmetic fixer, you're going to need a little cushion because you don't know if something's going to go up beyond what you need. Once you open a wall up, there could be more problems, and you're going to have to deal with that. So you should have a little bit more money. Budgeting is always 70% rule, so that you know that 70%, 30% is what you're going to make on the property. You should buy 70% under market rate. And then you should always have 10% above and beyond what you think you're going to be spending on the remodel. Option 1 and option 2, probably one of the most important things in this talk is if the market changes, you have to be willing to rent until the market comes back. If you cannot, then you're going to be selling at a loss, or you're going to just be breaking even. And for you, you might be okay with breaking even because you might just love the project. But honestly, time is money, and you're going to be spending a lot of time with contractors and being out there. And I would highly recommend holding on to a property and renting it until the market comes back and making your money back. So you want to know that if it doesn't sell, you can rent it and your rental's covering all your costs. Establishing the scope of the project starts way before you start looking at properties. And I would say that if you're new to flipping, I would invite you to consider a cosmetic fixer. Stripping something down to the studs, if you have a background in construction, no problem. That's something that you might feel comfortable with. But there is a lot of hidden costs and with permitting and with city ordinances and what's expected in terms of building something up from the studs. And it really goes city to city. So you can't take a project that you may have done in San Francisco and apply those ordinances to Oakland or to Menlo Park or to Sonoma County. You really do need to understand what the county requires in terms of the design and how things are done. But for our purposes, I really was focusing on a cosmetic flip for this talk. So when I talk about a cosmetic flip, I'm talking about modernizing counters, taking a home out of an older era and making it modernizing it, changing out the carpet, the paint, the hardware on cabinetry goes a long way. Redoing the garden, because gardens are trending right now. Everyone wants to have space outside. As a result of the pandemic, people want to be able to be outside in the middle of the day. We're working from home, and we need to be outside and in the light. I would say inside lighting is very, very important. and then an upgrade of the appliances. Let's say you did a purchase price of 600 to 950. You want to look at, okay, I'm going to do 4 of these, and you want to start asking yourself, how soon can I get contractors in, and can I layer, right? Can I layer my workers so that I can get this back on the market in 30 to 90 days? And your budget should, maybe your budget is $10,000 to $30,000. Well, your loan obviously is going to be 1.2, right? You're going to need your 50,000, 1 million too. You're going to need your 50,000 for $1 million, or 600, you might look to get a loan at 800,000. You're going to need a cushion of money just in case. And I would say just in case, meaning if you had to rent it, you may have to pay the rent or the mortgage a few months before you find your renters. Cost of labors, if you were going to move a wall, you would be looking at permits. If you were going to change a deck, you'd be looking at permits. Timeline, construction, you want to consider delays, and then the dynamic of the market. And when I say delays, I mean, you think you're going to put it on the market in 60 days, but the truth is one contractor got sick, or they had a death in the family. You already gave them, a retainer. You really need to keep going with them. So you have to wait for them. And they're not going to be back in town for another 3 weeks. That's what I mean by delays. Just the way it goes sometimes when it comes to the trades. Budgeting and investment, issues to watch out for. I added this slide. When I talked about this last time, I didn't have this. When you're going around and looking for an investment property, some of the larger, more expensive issues that you may not want to take on are foundation problems, sewer lateral, roof issues are very expensive, 15,000 all the way up to maybe 30,000 if there are really big roof issues. Dry rot, opening a wall and it's much bigger than just a little corner. Mold, you'll never get black mold out of a building. I would not recommend buying a building with mold in it, just so you know. The layout, if a layout just isn't that great and you don't want to move walls, just may not be worth buying a building because it just is funky. Outdated electrical panel. Just let's say your electrical panel is out of code, very expensive to replace, another like $9,000 replacing a heating system. It's a Noe Valley flip that I sold last year. I sold the one on the right. The one on the left is one of the buildings. It pretty much is what it started out looking like. This project went way over budget, and actually, to be honest with you, it's an ultra luxury market in the $5 million, $6 million range with a lot of investors, and they sadly lost money on that project. Business has different cycles, Q1, Q2. Once you get past spring and summer, you're into the fall, and once you go into the holidays, the market usually does drop. This is another building on the left is what these developers bought it for. The building on the right, they moved this into two TICs, upstairs, downstairs, 3,000 square foot on each floor. They sold each one for $3 million each, came away with $6 million. I think they bought that for $2 million on the left. You want to know your exit strategy. I can't say enough about that. At this point, I would say that one of the most important things is that if a property sits on the market, it's called carry cost, meaning you're paying for a property that you're not making money on. So you want it, saving money in the long run is, if something doesn't sell, you're going to be lowering the list price, right? Holding onto a property until the market comes back. We talked about that, moving it into a rental. This is a strategy you want to consider, and you want to consider it. You don't want to say this will never happen to me, because it does happen. Happens to all of us, right? When you don't think it's going to happen, the pandemic hit. That really affected my flip, and just had to be a rental. Do your due diligence before you purchase. Really critical. One thing you want to do is go into a project with confidence. So you want to know what the potential of a building will hold, and you want to choose the right realtor and who knows about investment property. Real estate investment made simple. My name is Darcy Elman. The next talk I'm doing is August 11th. I hope you will come, and thank you so much for coming to the talk today.